Welcome back. Consumer and business confidence has been dented by the war in Iran, with Australians feeling uncertain about their financial future. The latest ANZ Roy Morgan survey also shows that consumer inflation expectations have surged to a 3-year high, creating a serious challenge for the Reserve Bank of Australia. So let's bring in here Warren Hogan from EQ Economics. Warren, good to see you. Let's start with inflation expectations at 3-year highs. Households clearly under pressure, feeling the pinch with rising costs. Now petrol soaring. What does the RBA need to do?
Yeah, g'day Ed. It's a pretty tricky situation for the Reserve Bank. Although oil markets and the global scene has calmed down a bit overnight. But the reality is that this spike in inflation expectations is their sort of worst fear, because we had inflation drifting up. We have an economy that's producing jobs, unemployment's low. But a shock like this, of course, just adds to this sense out there in the community that your cost of living is going one way and that you need higher wages. And this is a real risk of getting inflation caught in the economy. So I think the Reserve Bank was already on track to raise rates over the first half of this year. I think next week they might as well just get on with it, particularly as it looks like the situation around oil prices has eased a little bit overnight.
Yeah, Governor Bullock, she wants to make sure inflation expectations remain anchored, but it seems like they're now drifting out of control pretty quickly.
Yeah, I mean, there's different measures, and certainly the Westpac Melbourne Institute consumer sentiment reading today was quite negative, although I would say it's still above where it was when we had the big downturn 18 months ago, 2 years ago. And their measure of consumer inflation expectations is back up to where it was when we had the surge in inflation 2 years ago. So it's picking up and it's consistent with inflation heading back towards 5%, although it may be temporary because it's an oil price spike. But the reality is, we are getting at risk of it getting stuck in our system, and inflation is moving higher. So they need to be seen to be responding to this, and they need to take this inflation risk seriously. And given that the governments of Australia are sort of spending at a faster pace and at a higher level than we've ever seen before, it's really up to the Reserve Bank to lead the way on this. And a rate hike next week, I think, is a good way to start that process of reassuring Australians that inflation will not get out of control.
The NAB business survey today as well shows business confidence dropped a bit in February. It's now in negative territory for the first time this year. I know the RBA watches this survey pretty closely as well. Probably not the piece of data they were hoping for ahead of next week's meeting.
Yeah, and look, this is the challenge, because if the oil price and petrol prices go up enough, we still have to fill our car up, and that means you've got less money left over to spend on other things. Not least if we see a major decline in financial markets and the global economy is weaker. So they are worried about the risks to the downside for the economy. And of course, that NAB survey shows that, yes, business activity is holding up, but businesses are getting worried about rates and global scene. So it is a bit of a concern. But that being said, within the NAB survey, it does depict a sort of a business community in Australia which is still confident. Its CapEx plans are up and forward orders were up. So I think it also highlights that, and you've been talking about this on the show, it's a shock what's happened with this war and oil prices, but the underlying economy's still got good momentum, and we had an inflation issue even before this spike in oil prices. So I think it's not a reason to stop them moving if they feel they need to, which I think they do.
Yeah, those forward orders are very important to watch. We can put the 3-year government bond yield up on the screen. I think it's currently around about 4.48%. In other words, money markets seem to think we'll need a few more interest rate hikes this year. There it is, 4.48%. I mean, how many interest rate hikes do you think will be required from the RBA?
Look, I've always said that they need to get the cash rate back to where they had it sort of 18 months ago, 4.35%, and see what the governments of Australia do with their budgets. And if they don't pull back on spending, if the federal and state budgets in the middle of the year, they may even have to do more. But there's at least another couple of rate hikes required here. And of course, as you show, those 3-year interest rates rising, also our 10-year interest rate is almost at 5%, and that's the highest in 15 years. That's inflation expectations in professional investors. So look, the RBA has got a real issue here that they haven't got on top of inflation. It's rising again, and they really need to act. And I think next week is the perfect time.
And is the ultimate fear here that the conflict goes on for weeks and prices for oil just remain elevated?
Well, the real fear is that the price of oil goes up to something that's really damaging to industry and the economy, 120, 150, who knows? And that's why the retreat overnight in oil prices was so important. But of course, it's the length of the conflict. And at the moment, I think we can be comfortable that it's going to be a month or so. And hopefully the Straits of Hormuz are open within a week or so. And the flow of trade starts again.
Warren Hogan, thanks for coming on the show.
Thanks, Ed.